Hi, welcome back to our channel. For those who are new to us, my name is Marcus. Today I'm going to share with you what happened during the past month or so, how it affected us as day traders. March is what we call crazy March. It's been a crazy time in the market. The huge drops overnight, and these huge drops actually triggered circuit breakers. Right? What are circuit breakers? And let me take a pause here to explain what circuit breaker is. Circuit breaker is essentially circuit breakers essentially pause trading after a certain decline threshold has been reached in the market. Right? Now, why is this circuit breaker important? It allows investors a chance to understand what's actually happening in the market. They have to pause there so that they are able to make rational trading decision once the market has restarted. Now, for example, if the S&P 500 index has dropped 7% from its previous close, trading will pause for 15 minutes. Now, this allows time for traders to take stock, to gather their wits even, to assess what's happening in the market. And when market restarts after 15 minutes, if it drops another 6%, that means a total of 13% drop, trading will again stop for 15 minutes. And if this happens before 3:25 Eastern Standard Time, it will stop for 15 minutes again. If the market value has dropped a total, S&P 500 has dropped a total of 20%, market will stop for the rest of the day. Now, this circuit breaker is important. It allows traders to take stock. It allows us to pause. It allows rational trading decision to take place again when the next trading day starts. So what else happens? Because of the craziness in the market, circuit breakers being activated, triggered, there were huge intraday swings. We've seen moves that were very sustained, 80, 90, 100 points even, right, in either way. Basically, there were no fundamentals in trading. The market was driven by emotions, and these emotions were basically fear in the market. So what happened? Actually, the few factors combined together to affect the market in a crazy manner. All right. Firstly, Saudi Arabia slashed oil prices for April. This is in retaliation to Russia's refusal to cut production output. Secondly, well, all of us are familiar with this term, the coronavirus. This has affected businesses, people globally. This is a pandemic. And thirdly, this is a decline in the benchmark 10-year treasury note in the US. Now, all these factors combined together triggered the circuit breaker many times. Between 9th of March to 13th of March, it was triggered every night, maybe sometimes once, sometimes twice, and trading was halted for at least 15 minutes each time. Let me show you on a chart what happened on the 9th of March when the circuit breaker was triggered twice within the same night itself. If you look over here, before market opened at 9:30, trading was already halted. There was a pause in trading. There was not much movement in there. The moment market opened at 9:30, do you see this line here? This is the bar that plunged. Market plunged 7%. Immediately market stopped, and this happened within maybe 5 seconds. So market halted for 15 minutes. And when market resumed, started again after 15 minutes, it plunged another 6%. So 7 plus 6, 13%. Again, market was halted here for another 15 minutes. When market started again, it started to go up, and we were able to take trades accordingly. Let me show you a comparison between a normal market situation. Now, this chart is based on what happened when the circuit breaker was triggered. 1 month ago in February, the market moved in a normal situation. In a normal manner, it behaves rationally. There were people who were buying and selling, and we were able to take trades accordingly as well. If you compare the two charts, there was no difference in the way we took trades. Back to 9th of March. When market started to drop, circuit breaker was activated. This drop here, we couldn't find any entry opportunity, so we just let it go. But when market resumed its normal movement, we were able to spot and take pretty good entry opportunities. In fact, there were 10 entry opportunities within this 2-hour time span for us. Okay, if you look at this chart and you compare a chart on a normal market situation in February, basically you see that we are still trading the same way, using the same strategies. There's basically no difference in the way we take our trades. Well, we have seen the two comparison of the charts. Okay, did much frighten us off? Okay, did it offer us any opportunity? Did we trade differently? Okay, what was the this all these circuit breakers, all these wild swing? Did it deter us from trading? What benefits did we derive from all these wild movements in the market? Well, I can say that I can show you some benefits of day trading. Okay, firstly, okay, as day traders, we do not hold any overnight positions. Okay, so pre-market news, pre-market circuit breakers do not affect us at all. We have heard about, and we've also seen examples of some option traders who were caught out of their position when market moved against them very strongly, and many of them have actually burst their accounts. This is very sad. Okay, but having said that, for us, okay, our methods dictates that when there's no movement in the market, no trades can be taken, and that is in itself a built-in safeguard which prevents us from taking unnecessary risks. Secondly, intraday swings. Okay, these intraday swings, which are huge, like I mentioned earlier on, is 80, 90, even 100 points, presented us with extremely good entry opportunities. Okay, as the moves were very sustained. Okay, we hit our targets faster. We are able to increase even our profit target. Okay, during normal market condition, we generally will risk about 6 to 8 ticks, okay, and target about maybe 10 or to 12 or maybe 16 ticks profit. Currently on ES, because of the wilder movement, because of the stronger moves, sustainer, we are risking about 12 ticks, okay, to go for about 20 to 24 ticks profit. The risk has increased, I have to agree. Okay, but please bear in mind, okay, that it's balanced by the increase in profits as well. So in other words, the risk to reward ratio has been maintained of 1 to 2. In many parts of the world, due to lockdown, due to closing of businesses, work disruptions, etc., income security has been lost. Okay, day trading actually allows us to continue to generate a cash flow to provide for our family despite the current situation. No one can foresee this pandemic and the extent of its damage, but it will be great to be able to have financial independence in times like this, and some of our members are very grateful for that. Thank you for watching our channel. Let us know what other topics you would like us to cover, okay, by leaving a comment section below. Remember to subscribe for more upcoming videos and click on the notification bell. I'll see you at the next video. Keep safe, stay healthy.